Hi, everybody, and welcome to Grow to Scale Your Business. Today we have Lucas Polowick, a fantastic CFO. Welcome, Lucas.
Thank you, Marina. Great to be here. Appreciate it.
It's way overdue. We've been working toward this for like 2 months now, or maybe three even. And I really wanted to have you on this episode because I wanted to demystify what CFO is and why established businesses, really need a CFO versus maybe a bookkeeper or a regular CPA. To give a little bit background about yourself so people know who is Lucas. So Lucas has over a decade in financial leadership, experience in financial leadership. He's been helping businesses to scale from 2 million to 20 million in revenue and achieve profitability and sustainable growth. The fact that you have revenue doesn't mean you're profitable. So you gotta know the difference between I have money flowing in and actually keeping that money in the pocket. So that's what Lucas is helping businesses to achieve. And one of the biggest challenges, and you probably can relate, is a lot of the financial world is the verbiage, the jargon, the concepts are very complex. So one of the superpowers of Lucas is translating or transforming complex financial data and terminology into strategic roadmaps, unlocking hidden profits, and optimizing cash flow.
Yeah.
It was a mouthful, but that's what Lucas does for businesses. So
Yes, thank you.
welcome again, Lucas.
Appreciate it. Thank you, Marina. It's great to be here.
I'm super excited. We have a full docket of questions and topics to talk about. So let's hop into it.
Let's do it.
First is we gotta start from the basics, from the foundation. And I'm sure that a lot of business owners asking themselves, what is the difference between a CPA, a bookkeeper, and a CFO? And how do these roles either complement each other or helping the business grow in the right direction?
Yes, that's a great question, a great point to start. So they're very much complementary in what the functions of all of them, and it depends on the size of the business generally as to whether business will have one or maybe two of them engaged or all of them. So fundamentally, every business should have a bookkeeper. I know there's a lot of business owners that try to do their own books and things like that, but I encourage business owners, especially smaller business owners, to make the investment into a bookkeeper. Because basically, what a bookkeeper does is they ensure that all of your financials are organized and readable at the end of the day. So they gather all of the data, everything, all the transactions that have happened, and put them into financial statements that are also applicable to your business, so that you're able to view your financials in a way that makes sense to your business, so that the data can be interpreted. So bookkeeper is really fundamental to even the work that I do or even a CPA does. So that's a bookkeeper's role. And then you've got the CPA on the other side. And generally, when people say CPA, a CPA can also do bookkeeping work. But generally, when people talk about a CPA, they're talking about someone who does tax and tax advice. And that's also an extremely important role because at the end of the day, um, nobody wants to pay more than they have to in taxes, and they also want to remain compliant to their tax obligations as well. And so that's generally when someone says a CPA, that's generally what they're thinking of and talking about. And then it comes down to the fractional CFO, or in my case, I'm a fractional CFO, but the CFO role. And a CFO role is really working with both of those other roles and creating, like you mentioned, the roadmaps for looking forward in a business. And so a bookkeeper by nature, their role is rearward looking when they prepare financial statements. It's stuff that's already happened. And a CFO is forward looking. What's going to happen next month, in the next 6 months, next year? And we use the data from what a bookkeeper prepares and also the recommendations and what the CPAs have, in terms of the tax planning and those types of strategies. And then we use those to help paint the picture and help build a roadmap for the business owner, working with alongside the business owner to put those things in place so that they have a clear direction of where they're headed with their business.
You know, um, yesterday I saw somebody on Facebook posting, I'm looking for a bookkeeper, experienced bookkeeper. And that was the entire post.
Yeah.
And I immediately answered, well, are you, well, I asked two questions. First of all, are you looking for a bookkeeper? Are you an accounting firm? Are you a bookkeeping firm that you're looking to add somebody to your team, which is one type of bookkeeping criteria? Or are you looking for an in-house bookkeeper to take care of your books? And if you're looking for in-house, that was a follow-up question to them.
Yeah.
Which industry are you in? Because if you're very specific about the word experienced, then
Yes.
experienced in what? And I gave them an example. When I run Airbnbs, I had to fire two bookkeepers because it's not because they weren't good bookkeepers, but they don't know the industry. And they were
Mhm.
asking me how the books should be done. I was like, that's not my job. You are the bookkeeper. You
Yes.
should know how to document it.
Yeah.
Otherwise, I wouldn't call you. I would just do it myself, right?
Yeah.
So it was a very important question to them. You have to update your post and be very specific which industry you're looking for if you're emphasizing the experience component of the job application, right?
Yes.
And it
Absolutely.
ended up being family office, and they have like three different industries they're in. So
Hmm.
either you need one bookkeeper that knows all three industries,
Yeah.
or
Yeah,
you
you may
need
need
three
another
bookkeepers.
bookkeeper. Yeah, exactly. And that's a great point because especially with bookkeeping where there is nuance to accounting and there is specialties and niches and everything like that. So it is important to ensure, especially on the bookkeeping side, that you when you hire somebody that they understand the business and the accounting standards and everything like that in your specific industry. And the same goes with um, I lost my train of thought, but basically the bookkeeping is very important on that regard because it is very technical, and so you want to make sure that the person actually knows. And that's why I also encourage business owners not to do the accounting themselves. Find somebody that actually knows your industry, the types of business that you're in, and they can guide you, and they'll do a good job then.
Is there a similar differentiation when it comes to CFOs? The
Um,
experience in certain industry?
Yes, I would say more high level though. It's not as like particularly like in your example there with Airbnbs. For fractional CFOs, it's more general like kind of niche. Like for example, I operate in the service business industry or niche. So that encompasses a lot of different businesses. But I don't do anything in, for example, in manufacturing. That's not really where my specialty lies is in manufacturing. Could I do that? Yeah, I could navigate my way through it and everything like that, but I don't understand that business model as well as I do service businesses. And so it is important to try to make sure that you match those your business to the skill set of the professional that you're hiring, whether it's a bookkeeper, CPA, or for CFO like myself, for sure.
Great. It's funny because a lot of times business owners ask me, well, you're a business coach or business strategist, but you've never done it in my industry. And
Mhm.
for me specifically, I start by saying, well, business is business is business. So
Mhm.
something as common as dirt in one industry can be as effective as atom bomb in another.
Yes.
However, there are certain industries that I wouldn't feel comfortable jumping into because there are a lot of intricacies that I'm not familiar with, like food industry. I just
Mhm.
don't want to deal with uh, servers and hostess and optimizing that process because I've never been in that industry, and
Mhm.
that one is specifically an industry that you really need like a foot traffic experience, like on the
Yes.
job experience in order
Yeah.
to optimize it.
Yes.
So
Yeah,
you gotta know your strengths, and you gotta know when to say no to a job. And
absolutely.
if somebody tells you I do it all,
Yeah.
they're lying.
Yes. They
Don't
probably can try to do it all,
They
but
can
that
try.
doesn't mean that they will be effective. Exactly.
Yes,
Exactly.
for sure.
So, no, I completely agree. And I do the same thing. Like, when I meet with a prospect or you know, when we have that initial meeting or maybe a follow-up meeting, I'm interviewing them as much as they're interviewing me. Because at the end of the day, I want to be ensure that I'm going to be able to add value and I actually understand what their business is about so that I, know whether that's like, hey, I can add value here and I'm going to be the right fit. Or if I'm not, then I'll refer them out to a different CFO that, maybe is a better match for what their business is. So absolutely, I completely agree with that.
Now, one of the biggest problems with businesses is that they're a lot of times working from a place of reactiveness
Mm,
versus proactiveness, if that's a
mm,
word,
yes.
if that's an English word. So they're working on a reactive mode. I'm putting out fires. If so,
Yeah.
I will act only if it happens, but they don't
Hmm.
do proactive analysis or proactive prep work when it
Hmm.
comes to I want to grow, I want to scale. But before I jump into that deep end of the pool, I need to know whether or not I'm capable of financing that expansion or that growth, and whether or not I'm able to bring in more people, invest in technology, and so on. So, the question to you: what are the red flags or the triggers that indicate to the owner you might want to shift from reactive to proactive mode?
Yes.
What are your thoughts?
Practical one is if they're experiencing cash flow issues. And to be frank, most businesses that I've encountered, that's one of the main things that they experience is cash flow issues. And you can get on top of cash flow issues and be ahead of it so that you're not experiencing those crunches, when it comes to payroll or you're having to check your bank balance every day, whether you can pay this bill or that bill. Um, that's a major one. So if you're a business owner and you have experiencing that, you can be proactive so you don't have to have those headaches. And that's a good indication that should probably start either investing more time yourself into managing your finances or bring somebody like myself in that can help get you looking ahead and is as opposed to being reactive. And it's a great point that, business owners do tend to be reactive instead of proactive. But that's also due to the amount of work and hats they're wearing in their business, and it's not a result of that they don't care enough or, they're not good enough at that side of the business. It's mostly a time issue. And that's basically where someone like me can come in and help them basically get more time back, and help get them to stay on track and help them to, make those decisions. If they're trying to scale, they're trying to build, or whatever the case may be, they're trying to add additional staff or more equipment or whatever, and can I afford it? We can help answer those questions and also put in timing of when that happens. So, you don't have to just look, well, maybe next month I can do it. Well, let's know. Let's look at the numbers, let's plan it out, and we can build it in. So, absolutely.
And it's interesting that you're saying it, because even if you're at if you're in 2 million or 20
Mhm.
million,
Yeah.
a lot of the business owners that started the business are not necessarily um business oriented kind of people. They're very technical, fantastic at their craft. I call them mechanics. They're fantastic at what they do, but
Hmm.
when it comes to business acumen, which requires financial management, uh, optimizing the operations of the business and technology and so on and so on, they have a gap. And that
Hmm.
gap, unless they put themselves through school and take all the necessary courses, which is time consuming, back to your point of time is the issue
Hmm.
of many of the business owners. Finances is one of the most complex topics to catch up on, and brush, brush your knowledge up on
Hmm.
that topic. So bring, sorry, bringing in CFO that doesn't, you don't need to learn what they know, just
Hmm.
leverage their knowledge and the years of experience to help you analyze the finances, analyze if you need to buy equipment, do you have to buy it cash? Can you lease
Hmm.
it? Can
Hmm.
you like do rent to own, which is a little bit different than leasing,
Hmm.
I guess. I don't know if like I know rent to own in real estate. I'm not sure in equipment world if leasing and rent to own is it similar?
Yeah, they are similar. They are similar. Like
Parallel?
well, you can get leasing, and then you can also just get like a loan basically to pay for the like it's
Right.
outright purchase of the equipment, and then you just pay the bank back. So they're similar in that regard. Yeah.
So even calculating whether it's a good loan to take out for your business.
Yes, exactly. And whether even the bank will look at their financials, because a lot of times there's certain things that the bank is going to want to see in their financials. And, is the business even in a position that they can go and ask the bank for money? Because at the end of the day, the bank wants to ensure that they can get paid back. So they want a clean set of financials. They want to understand the business's profitability, and that also that the owner who's running the business has like skin in the game as well. So they're looking at things like retained earnings, and there's a whole bunch of things that go into that. So yeah, that's a great point in the sense of um having a CFO on board to help answer those questions and provide clarity, and whether it's right time now to go to the bank, or we should wait, or hey, let's just buy the equipment outright. You've got the cash, or that's a better investment, or whatever the case may be. Yeah, absolutely. Those are questions that a CFO not only can help answer, but um, they can. We're also like a sounding board for the owner as well, because at the end of the day, the business running a business as an owner, it's a lonely role. You can't confide in the staff you have under you, and so who do you confide in? And so somebody like myself, I think I like to think of myself as kind of the the guy riding shotgun, or in the
The
passenger.
psychologist of the
Yeah,
financial psychologist.
and I'm there to bounce ideas off of. I'm there to validate ideas, and my job as a CFO is not to say no. I'm not controlling the money. It's yes, but this may be the consequence, or yes, but it maybe not right now, or whatever the case is. And it's just to provide and try to get to the yes, but it's how we get there, and that's really what I'm trying to do. And it's a great value that I can add as a CFO, is that kind of sounding board for business owners.
So is cash flow problem the only red flag, or there's one or two more that you can think of?
So cash flow is a big one. In terms of being proactive, I would say if you're not even reviewing your financials, like it just kind of is something that is in the back of your mind, and you don't have a dedicated time to sit down every month and look at what your bookkeeper is hopefully sending you every single month, and you're looking through it and everything like that. I would say that's another kind of a red flag, because at the end of the day, you need to understand where you are financially, and that's going to help you make better decisions and informed decisions in your business. It'll even help you understand whether you're pursuing the right line of business. Most businesses have more than one income stream, and one of them is bound to be more profitable than another. And so, you need to understand which one you should be dedicating your time to and your resources. If you're marketing to the revenue stream that's not profitable for your business, you want to know that, because you would want to then adjust and go down a different route. So those are the types of things that you really want to be checking your financials. So if you're not checking your financials, you've got cash flow issues. Now is the time to probably start looking in, trying to be more proactive with your financials for sure.
So what is your method to shift that mindset of the business owner from being reactive to being proactive? Because mindset is everything.
Absolutely. So firstly, one of the main ways that I do that, I mean, my job is to look forward. That's what I'm doing, is I'm looking forward. So naturally that comes into the conversation with the business owner when I meet with them. But having a regular meeting every single month, where that's what we do. We review what's happened, but mostly it's about pulling out, maybe the red flags or some of the wins in what's happened, in a quick summary of that, but most of it is looking forward. What does the business owner see that's going to happen this month or the next month, or what big projects are they working on, or what big deals have they got in the pipeline, and getting them to think more about that stuff, because that stuff is understanding those what's going on that may not be already recorded in the financials. Those are the things that are going to be affecting cash flow and the forecast and profitability and whether we hire and when we hire and what equipment we need, et cetera, et cetera. So it's having those kind of forward-looking conversations and helping the business owner to start thinking that way. And so that's naturally comes in when I have those meetings with business owners. And usually it's once a month is generally the kind of the cadence that I have to those meetings with business owners.
Did you ever have business owners say, no, I don't need it, or no, I don't want it. I'm
Uh, like
good.
like those meetings you're saying?
Well, did you ever have a business owner say, no, it's good. We don't need a once a month meeting, or that I'm good. I don't need your review or your analysis.
Yeah, I've had business owners that want just like, oh, well, just send me a document, just email it to me. And I'm like, well, that I know you're not going to read it. And that kind of defeats the purpose of us like being engaged because at the end of the day, the value is not in the spreadsheets that I can send you or some graphs or things like that. It's we're working together to take your business forward. And so it's that bouncing of ideas that, for lack of a better term, confiding in saying like, these are the struggles that I'm having. How do we overcome them and working together to get through those and start looking ahead and start kind of building with a mindset of what's happening, going to happen tomorrow or what's coming around the curve. That's really the value that I add to business owner because at the end of the day, even in a bookkeeper, they can produce graphs and charts and KPIs and things like that, but how that actually impacts your business and what does it actually mean for the decision making that you're doing on a daily basis, that's what the value is, and that's where I come in. I interpret that stuff and help the business owner basically see where they're headed. So
Makes sense. Well, since we're talking about graphs and numbers and reports, let's talk about KPIs. Let's
sure.
talk about what are the most crucial KPIs or key performance indicators that every business owner should be tracking to get a true picture of the financial health of their business?
So some of the most just straightforward things that I think business owners should be looking at, regardless whether you have a CFO or not, that'll really help you determine the health of your business. Is firstly, I like to work, especially on an income statement, just work top down. So you've got your revenue at the top, you've got your cost of goods sold. For a service business, that's usually the direct labor that goes into the end product. So none of your back office staff should be in there. And if you're a service business and you have all of your personnel lumped in one line item on your income statement, get your bookkeeper separated out. You want your back office staff on one, and then you want your frontline staff up in your cost of goods sold. I know it's not really a cost, it's labor, but it makes it a lot easier. And the reason for that is the gross profit margin is probably the biggest one. And because at the end of the day, if you're not making, a good, healthy gross profit margin up there, the rest, whether it's, the expenses for running the business and your insurance and your rent and everything else, you're not going to be able to pay for that stuff at the end of the day. So that gross profit margin is probably the number one thing that I would say to be looking at. And then down from there, your net profit margin at the very bottom is also very important. And something that some business owners um, struggle with too is they look at their gross or their net profit margin like, wow, I made a lot of money this year. And it's like, but your salary's not in there because they just take it out in drawings and, that sort of thing. And that's something to consider as well, because at the end of the day, if you have to put your salary back into your net profit, what is that real figure? What is that real net profit figure? And then the other thing is on the expense side of things as well. So it's just really basic. The gross profit margin is the biggest one for me. And then, what is that net profit margin figure? And then basically, what is the trend of the expenses? what are you doing overall with the expenses? Are they going up? And is that going up because of revenues going up, or is that going up because there's no parameters being set around expenses and they're just creeping up? So those are the things. Trends, gross profit margin, net profit margin. Those are the three kind of major things that I'd be looking at just in a month over month.
How do these KPIs help you identify financial fires?
That's a great question. Again, I would say it's the trends. That's where it comes down to. So, for example, say you've got your gross profit margin, say, let's say it's 65% one month. Well, that really doesn't mean anything in the whole scheme of things because we don't know. But if it was 80 2 months ago and now it's 65, well, then that's something you need to be looking into. Has your labor cost gone up? Are your jobs getting squeezed because there's more competition in the market? You have to then use those, the trends to identify what's actually happening. Another one is to look year over year. So if we're looking in, let's say it's September, well, what happened in September last year? Has the business grown substantially since then? That's great. Well, then what's happened with the expenses or the gross profit margin? Is it the same or is it gone down? Is it gone up? And you want things to either be increasing or at least if they're healthy to start with, at least staying the same at the minimum. So those are kind of what I would be looking at it.
I had an interesting conversation with a real estate investor last week. Yeah, last week. And we're talking about how expensive renovations became. He does flips,
Mm,
but he also owns a construction company. So
okay.
if he doesn't do his own flips, then he works on construction projects for other investors or commercial or whatnot.
Yeah.
So we, I mentioned that his job became probably very expensive during COVID because the material cost became insane. And now you probably should have gone down to the same level before COVID. And he said, no, because when, if before COVID, 2x4, which is, who doesn't know materials, it's a wooden thing, like
Yeah.
wooden
Yeah. One of the most standard pieces of wood you use.
standard piece of wood that is used in any type of construction. So 2x4s would cost like $1.50 or something like that.
Mhm.
During COVID, he said one 2x4 would cost me $10. Like, look at the hike. And you're from
Yeah.
Canada as well, so like
Yeah.
it's in Canadian. So $10. And we have our own wood. We don't even need to import it, but still it hiked to that price. And now post-COVID, it's still not down to $1.50 because people got used to paying 10. So
Yeah.
yeah, they reduced the price, but they didn't reduce it back to 150. They reduced it to, I think he said $4 or something like that, or like three
Mhm.
something. So when you look at his books, you would see that the cost of materials is extremely high, much higher
Mhm.
than before. Because I was trying to gauge, I was asking him, what is uh, the cost of renovation per square foot? That's how,
Yeah.
if you're in flipping world or real estate world and you think about renovating a property, you don't have time to go and get quotes for every single piece of material that you need in order to
Yeah.
renovate. So you gauge it by square footage. You would say, well, per square foot, if I have to do a basic, it will cost me $40. And if I have to do upscale and luxurious, maybe it will cost me 70 or $80 per square
Yeah.
foot or even higher. So
Yeah.
it's like the basic. And he said it right now it costs about 45 to $50 per square foot. It's like, holy, pardon the French, holy shit.
Yeah.
But before COVID, it was $35, 30 to 35. So now it's a
Yeah.
huge hike.
Yeah, that's like
Going back to
30%
the
increase.
books.
Yeah. No, exactly. And so when that sort of thing happens, you have to adjust so that you're not eating those margins. Because also too, what happens is if your cost of materials or cost of goods or cost of labor has gone way up and you don't adjust your pricing, what ends up happening is you do end up experiencing cash flow issues then at that point because your other expenses have all gone up and now it's coming out of your net profit at the end of the day. So you either have to adjust pricing, which can sometimes be difficult too, because if the market won't take that because no one else is adjusting their pricing up, that can be very difficult to manage. So you've got to try to find other ways to either add value or to provide better service so that it's justifiable for those, or maybe there's opportunities to cut costs and order in bulk, or take advantage of discounts or something like that. But those are really, but for those gross profit margins, yeah, they're really tough. But you have to be on top of them all the time.
So I love the example. Now it was a real example that people can bite into and understand
Yeah,
um, how to look at their books when it comes to,
yeah, absolutely,
financial fires.
absolutely,
That's a huge
absolutely.
financial fire when you
That
double
that
your,
one is that one is yeah,
that was like not even 4 times, it was five, more than 5 times the cost of materials
yeah,
during COVID. So that
yeah,
should have been adjusted as well.
yeah.
Okay, let's talk profitability of, I need to roll it on my tongue. Profitability. What are the most common mistakes you see business owners do from your experience, making that are silently eroding their profit margins?